Okay, in this video we're going to continue and look at the impact globalisation has had on the environment, on financial markets, on the economic stability of Australia. And we talked about this a little bit in the last video, and the impact it's had on the government. So starting with the environment, look, one of the benefits of globalisation is that multinational companies have become better global citizens. So they fear that, that if they're not environmentally friendly, that can affect their reputation. It can lead to customers boycotting them and can also really affect their share price and hurt their shareholders. So there's been a real focus on sustainability and trying to look after the environment amongst large multinational firms. There's also strict rules in terms of not facing environmental laws, and they can face prosecution for not facing those, for not abiding by those laws as well. So there has been some benefits from the environment, and that stems from the fact that multinational companies have a tendency to follow the rules because they can face public backlash. In terms of weaknesses, there's a lot of weaknesses associated with globalisation and trade. Basically, trade involves large volumes and therefore large distances of shipping and air cargo. So lots of things are getting travelled, lots of products are being moved over a long distance. That can lead to a lot of air pollution. So transport generates 25% of Australia's air pollution, for example. It leads to the burning of fossil fuels for transport. That creates carbon emissions. More production of goods and services also leads to more environmental damage. More agricultural production. So, for example, Australia specialises in mining as one of our areas of comparative advantage. That can lead to more production, can lead to a lot more carbon emissions. We also specialise in agriculture, which relies on more fertiliser and pesticides. Other countries experience problems with logging, so deforestation, increased use of water for agricultural exports. So it can lead to environmental problems in terms of using up non-renewable resources, increasing our use of water, increasing deforestation as well. In terms of the impact on financial markets, basically in Australia, because of the increasing competition, there's been a deregulation of the financial market in the 80s and 90s. And basically what that means is more competition in the banking sector. So there's a lot of major Australian banks. We also have to compete against foreign banks. And because of that increasing competition, they've had to offer lower interest rates on loans. So because there's more competition, they can't afford to charge homeowners too much for their mortgages. And that's helped sort of increase our living standards because we've been able to get access to cheaper credit. So foreign banks have been set up in competition with local banks. Interest rates are set basically based on the competition within those banks, and that allows consumers to get more access to funds, as well as businesses to get more access to funds, as well as getting them access to funds at a cheaper interest rate. So that's been good for borrowers. Can be bad for the banks because they don't get as much profit from mortgages. So the large amount of investment that flew through Australia has led, in terms of financial markets, has led to lower interest rates because of increased competition. There's also been a willingness of Australians to allow for increased foreign ownership of many companies. Unfortunately, that means that more profits are now flowing overseas. So many people argue that too many companies are now foreign owned, and that means that a lot of the profits are flowing to overseas nations and not rather than staying in Australia, which is bad for our so it's called our current account, but it's bad because the profits aren't staying in Australia. In terms of the impact on Australia's economic stability, so that's about achieving stable growth of sort of 3 to 4% per year. It's highly dependent on, Australia's growth is now highly dependent on economic growth around the world. So, for example, when the GFC originated in the USA, that had repercussions for Australia. When Americans started defaulting on their loans, financial institutions in America and around the world suffered. So without access to cheap credit, firms closed, workers lost their jobs, and consumers and business confidence started to fall. So essentially what we're saying here is that Australia is at the mercy of overseas growth. If other countries aren't growing as fast, we don't export as much, but we can also experience issues with share markets collapsing overseas. It can lead to less foreign investment in Australia, so it can lead to property and asset prices falling in Australia when other countries have recessions as well. So we're really at the mercy of the growth of other countries. We need growth to be strong, otherwise we lose money on shares, we lose money on exports, we lose money from decreased foreign investment into Australia. And lastly, the impact on the government. Due to the increasing competition, the government has implemented a range of different initiatives to try and compete on a global scale. So one of the main things that the government has done is encouraged deregulation. It's also put more pressure on them to manage the economy in a safe and sustainable manner. So it's really keen to keep our debt levels low so that we can keep our credit rating high. If we don't keep that credit rating high, the two issues that causes is that other countries will stop lending us money. So the Australian government relies on money from overseas. If we don't get access to that money, then we can't grow the size of the economy and grow the size of our businesses. So globalisation and access to credit from overseas is important, but it's also important for us to manage that money in a safe and sustainable manner so that we can keep our credit rating high. The government it's also sort of forced the government to keep tax rates low because they want to encourage foreign investment. So, for example, company tax rates in Australia have fallen from around 49% to 27% because we want to keep those tax rates low to encourage foreign investment because that creates jobs. It's also important, though, that the government's not completely at the mercy of multinational companies and are doing what's best for the economy as a whole. So these multinational companies have created more revenue from the government in company taxes, but they've also encouraged us to lower our company tax rates so that we can remain competitive with other countries. Thank you.